Hello traders, in this video I want to show you 10 things you need to stop doing immediately if you want to become a very profitable forex trader. This information I'll be giving you spans from my many years of trading the forex market, making a lot of mistakes, getting it right, and then becoming profitable and becoming successful. So I'll be showing you these 10 secrets that you need to know. You just need to view this video from beginning to the end so that you don't miss any of the information, life-changing information I'll be sharing with you to expose to you the 10 things you need to avoid if you wish to become consistently profitable forex trader. The first mistake is trading too many pairs. All right, many beginners believe trading multiple pairs will increase their chances of making profits. But what's the reality? The reality is it usually leads to confusion and losses. Each currency pair moves differently based on economic conditions and market sentiments. So when you are spreading your attention across too many pairs, it prevents you from actually understanding how each of these pairs behave. You need to focus on mastering a few pairs like just Euro USD, GBP USD, or any other two or maximum 2, 3, or 4 pairs, all right? And get a hand of them, get familiar with them, get familiar with their reading, understand how they move, understand their behavior in different market conditions. I guarantee that you become a better and successful trader if you do that. Okay? Now, the second mistake most traders make is moving from strategy to strategy. Switching from one strategy to another after another or after a few losing trades is a major account killer. No strategy has 100% win rate, and no strategy wins all the time. Losses are part of the process. So constantly jumping from one strategy to another means you are never giving yourself the opportunity to grow, the opportunity to learn. Okay, so it means that you never give any one method, any one strategy the time to work out or the time to refine its process through your trading. All right, all strategies have their up and down moments. If you keep changing strategy after each loss, you will never enjoy the times when the strategy will yield you profits. All right, so when you allow your strategy to work out, you trade a strategy in and out across the year from January to December, year in and year out. You will understand how that strategy works. You benefit from the wins when the strategy begins to yield you wins. You also know when the strategy will bring a bit of losses as inevitably so. You would get both sides of the strategy. But when you keep hopping from strategy to strategy, you will not be there when to enjoy when the strategy will begin to give you money. So what you need to do is to pick one proven system, study it deeply, and give it enough time to show its results. I have a lot of strategies on this channel. Go to the strategies section of this YouTube channel and you're going to see many strategies. I don't advise you to trade all of them. Get one of them that you feel resonates with you. Do a back test of the strategy, and if you understand it, continue to trade it. Give it some time, give it some months, give it some years, and I believe you'll become better at it. Another bad mistake that most traders make from experience is overtrading. Overtrading usually comes from greed, from boredom, from emotional frustration, and this is not good. You need to find a way to control these things. Taking too many trades increases transaction costs. All right, because each time you place a trade, there's always a transaction cost, and it also increases emotional fatigue. Most professional traders I know understand that quality beats quantity. Wait for clear, high probability setups. And sometimes the best trade is no trade at all. That is to say, sometimes you have to sit on your hands and do not take trade if the market will not give you all the clear signals that you need to trade. Do not force trades. Avoid overtrading. 1 to 2 trades per day. I don't take more than 2 trades per day personally. Okay, 1 or 2 trades per day is enough. Sometimes no trades in a day if I do not have the clear signals according to my trading plan about a setup. Now, the fourth thing that you need to stop doing is not showing up daily at the market. Success in forex trading requires discipline and consistency. Even when you are not trading, spend time observing the market because it helps you to stay connected to the price action, trends, and volatility. Make it a habit of reviewing the market daily, even if it's for 15 minutes, to stay sharp, to stay connected, to stay informed about the market behavior. and also to get the rhythm of the market, to be able to know how to feel the pulse of the market. All right. So you need to understand that you need to be consistent. For many years I've been trading, there have never been a day I have never opened my chart. Every day I open my chart. That does not mean I trade every day, but there's no day that passes without me looking at the chart. That has helped me over the years to understand the chart, to feel the pulse of the market, predict accurately what the market can do at any point in time by merely looking at the chart. A few moments. This doesn't come on a platter of gold. It came from consistency. It came, this attitude and this behavior and this skill came from my years of interacting with the market and not taking breaks. Okay. Now, the next thing you need to stop doing is not thinking in probabilities. All right. Forex trading is a game of probabilities. It is not a game of certainties. Expecting every trade to win will only lead to frustration. Successful forex traders focus on setups that offer positive risk to reward ratios over time, not one lucky win. Accept that losses are normal, losses are part of the process, losses are inevitable. I see losses as the operational cost of doing the business of trading. Focus on consistent execution and not perfection. Think in probabilities. Take a handful of trades. In a handful of trades, you need to take as much as 100 trades before you can be able to tell if a strategy is good or not. 100 trades and following consistent risk management, like trading 100 times, same strategy, risking consistently 1% per trade. That is the only time your statistical edge can play out. So you have a good risk reward ratio of not less than 1:2 risk reward ratio, risking at least 1% per trade, trading at least 100 trades over time. It must not be in a day or two, it could be several months. Then assess all the 100 trades. You will be able to see the statistical edge of your strategy. Okay, so the 16, you need to stop comparing yourself with other traders. Now, social media has been helpful in recent times, but social media can make this trend of comparison worse. Everyone seems to be making more money than you, but every trader's journey is unique. Okay, and one problem with social media is that people can fake things in social media. That's why you don't see me posting my cars, you don't see me posting money, mansions, and all that in order to paint a false narrative. I don't even share when I share my charts or my chart. I don't put the lot size that I took the trade. My goal is not to impress. My goal is to show you consistency. My goal is to show you that the skill can be gotten. I don't intend to paint a false narrative of false wealth and all that. No. Okay, the skill is a skill that can be gotten. Use this skill to make profits from the market if you implement the principles of trading that I share. So each trader's journey is unique. All right, your risk appetite, your capital, our capital is different. Okay, some people trade with $100, some trade with $5,000, some trade with even hundreds of thousands of dollars. All right, and implementing the same principle can yield the same result regardless of your account size. That is why I don't even share my lot size. So comparing yourself to others only cause self-doubt and emotional pressure. So you need to make sure your progress is measured against your past performance, not someone else's highlighted reels or Instagram post or Facebook post or YouTube results or whatever. Compete against your past, your past self, and not against others. And you will see a remarkable increase in your trading performance. So next thing is inconsistent risk management. That's another mistake most traders make. Inconsistent risk management. This is very, very obvious, and this is one of the biggest undoings of forex traders. Without consistent risk management, such as using stop losses, maintaining a fixed risk per trade, even a very lovely and good strategy can fail. You are not supposed to risk more than 1 to 2% of your account per trade. Your first goal, your first objective as a forex trader is capital preservation, not profit making. Therefore, protect your capital first. Profit will come later and naturally. If you implement consistent risk management of 1% per trade, following the same strategy, having a good risk reward ratio of at least 1:2, there is no way you can trade a strategy, have 100 trades following a strategy, following your trading plan, that you will not come out profitable after a handful of trades. This is statistically proven. All right. But the problem is most traders would not be consistent in their risk management. Some traders would increase their lot size when they think that the trade will win, and unknown to them that any trade can fail. You just have to be consistently given to risk management. You have to be consistently following good risk management. No exceptions, no excuses. Never move your stop loss. All right. Never move your stop loss for any reason. Never increase your loss size inappropriately. Consistently maintain risk management. No excuses, no exceptions at any point, because it only takes one act of irresponsibility to mess up your years, your months of trading results. You could be making profit for like 5 months, consistently following good risk management of 1% per trade, and on one day you could have a relapse of maybe like you just choose to risk 5%, and if that trade goes south, it could be the beginning of inconsistent and irresponsible behavior, because if you lose 5% on one sitting, you might want to try and up the game again and try to win, risk another 5%, and before you know it, you blow your account. Be consistent in your risk management. Another thing you need to understand is you need to have emotional control. Inconsistent emotional control is another undoing of forex trader, another greatest deadly mistake most forex traders make. Emotions can destroy a trader faster than a bad market move. Okay, it is not a function of what the market does, the function of what your reaction to the market. And you control your reaction to the market by following your trading plan. Having a trading plan and following it religiously is one of the greatest way of maintaining emotional discipline, one of the greatest way of controlling your innate emotional habits. Fear makes you close trades too early. Greed makes you over leverage. And frustration makes you revenge trades. You need to develop emotional discipline. Stick to your trading plan whether you are winning or losing. A trading plan saves you a lot of problems. A trading plan is the panacea, is the cure, is the special antidote to inconsistent emotional control. Following your trading plan does the magic. It helps you to be consistently profitable. It helps you to be disciplined regardless of the market behavior. Failure to keep a trading journal is another deadly mistake of many forex traders. A trading journal is your most powerful improvement tool. It is an improvement tool. What does it do? It helps to keep track record of your trading performance, and so you can be able to know what's working. It gives you data for improvement. Know what's working, what's not working, to stop doing what's not working, do more of what is working. Without a trading journal, you can't track your mistakes, you can't see what works, or you may not even be able to understand your trading behavior. Document every trade, your entry, your exit, the reason for taking a trade, your emotion at the time of taking a trade, and review it every week, at the weekends. Review it, the risk to reward ratio, and every detail about the trade. The date of the trade, very, very important. This helps to build a statistical data, pool of data that you can review, and helps you to advise yourself as to what you need to do more and what you need to stop doing. Number 10, one of the greatest mistakes of forex trader is not using a trading plan. Don't worry, I'll give you an extra tip. Number 11, I'll take it number 11 as a bonus tip. But number 10 is not having a trading plan. Trading without a plan is like driving blindfolded. A solid trading plan defines your entry and your exit rules, your position sizing, and your review process. It states what you need to do before entering a trade, when you've entered the trade and after you've entered your trade. It regulates your trading behavior. It's like a compass for trading. Before you get into a trade, what you need to do, what you need to check, how you need to cross your T's and dot your I's, your behavior during the trade, your actions during the trade, and your actions after the trade. A trading plan keeps emotions out of the decision-making process. You need to write your trading plan down and follow it religiously. Don't have a mental trading plan. A trading plan has to be written before it qualifies as a trading plan. It has to be written down, reviewed, and approved by you, and followed religiously. This is very, very key. Now, I'll be showing you number 11, the 11th, a bonus tip. But before I do so, could you please kindly subscribe to the YouTube channel? If you found this video helpful, give the video a thumbs up. Also, if you want to join our free Telegram community, the link is in the description box of this video. In that Telegram community, I share free setups and analysis that can help you to trade at your own discretion. Also, if you want me to train you, take you by the hand, help you to become a very profitable trader, even if you have spent years trading the forex market with no improvement or with no result, I can actually help you to make a difference. And what you need to do is to contact me. My contact detail is in our free Telegram community, and the link to my free Telegram community is in the description box of this video. Right? So I do one-on-one mentorship. The reason I do one-on-one mentorship is because I believe that each individual has their individual learning curves, and I stoop down to your level, become flexible for you, and help you to identify your deficiencies and help you to correct them. And after you are done with my course, with my program, mentorship program, your trading career will change for the better. Now, last but not the least, bonus point. Why most traders fail is because they make the mistake of not having a balanced life from trading. Many traders get consumed by the chart and forget to live their normal lives. This leads to burnout, stress, and poor judgment. A clear, rested mind makes better trading decisions. So you need to keep balance by exercising, by eating well, by resting well, and spending time away from the screens. Have time away from the screen. Do not be on the screen 24/7. That's why I do not support or like scalping. Okay, scalping makes you to live your life on the chart. No. Okay, you could day trade or swing trade. Trading is a part of your life. It is not an entire part of your life, and so you should treat it as such. Take vacations. Take time away from the screen sometimes. All right, and analyze your chart. You need to trade strategies that are not scalping strategies. Analyze your setups. Shake your chart once in a while. Okay, when you are done with trading 1 or 2 setups per day, close your trading app and go for a walk. Do other things. Have other aspect of your life aside trading. This helps to create emotional balance, refreshes your mind, helps you to come back the following day with a fresh and a clear mind, and helps you to make a more balanced trading and better trading decisions because your mind is refreshed and not exhausted or burnt out by being on the chart 24/7. So becoming a forex trader that is consistent and successful is not about finding a magic indicator. It's about mastering discipline. It's about consistency. It's about first self-awareness and emotional control. If you avoid these 11 deadly mistakes I've shown you, you'll already be miles ahead of most traders. You need to remember that in trading, survival comes before success. Stay patient, stay focused, and let your edge play out over time. If you're yet to subscribe to this YouTube channel, please do not fail to do so. Give the video a thumbs up if you found value from it. If you want to join our free Telegram community, kindly follow the link in the description box of the video to join our Telegram community. And if you need me to train you one-on-one, mentor you to become a forex trader that is profitable and successful from my many years of experience, do contact me. My contact details in our free Telegram community, and the link to our free Telegram community is in the description box of this video. Alright, till I come your way next time with another useful content, do have a wonderful day ahead. Bye.